My name's Tim Spear, and I'm from Hertfordshire, England. I was thinking, in Ben Graham's book, The Intelligent Investor, he spends the first couple of chapters discussing the level of the market and whether it was safe for investment. I was wondering what you'd think of the market today.
Well, we don't, Charlie and I don't think about the market, and Ben didn't very much. I think he made a mistake to occasionally try and place a value on it. We look at individual businesses, and we don't think of stocks as little items that wiggle around in the paper and that have charts attached to them. We think of them as parts of businesses, and it is true that currently we have great trouble finding businesses that we both like and where we like the managements, and find them at an attractive price. So we do not find bargains in this market among the larger companies that are our universe. That is not a stock market forecast in any way, shape, or form. We have no idea whether the market's going to go up today or next week or next month or next year. We do know that we will only buy things that we think make sense in terms of the value that we receive for Berkshire. And when we can't find things, the money piles up. And when we do find things, we pile in. But the stock market, I know of no one that has been successful at, and really made a lot of money predicting the actions of the market itself. I know a lot of people who have done well picking businesses and buying them at sensible prices. And that's what we're hoping to do. Charlie?
How could you say it any better?
Yeah, but the question is whether you can say it better, Charlie. Okay, we'll go to zone 2. That may be all you hear from him today. Get used to it.
My question has to do with the retailing industry, particularly the department stores and mass merchants. My question has two parts. Without resorting to comments about specific companies, may I ask your opinion as to the long-term prospects for growth and profitability of this industry group? The second part of my question is, given the fact that it is difficult to pick up a newspaper or to be an investor without being bombarded by what is purported to be the potential for exponential growth in the internet e-business, particularly directly to consumers, which could possibly eat into the revenues of these retailers, and even if we assume a relatively low impact of, say, 5 to 10% revenue reductions, and given the fact that top-line growth is critical to any business, especially the bricks and mortar retailers with their high proportions of fixed overhead, what advice could you give to a CEO of such a company? And in turn, based on the preceding scenario, what would be your opinion of the medium and long-term prospects for this industry?
Well, that's a good question, too. And obviously, the internet is going to have an important impact on retailing. It will have a huge impact on some forms of retailing, change them and maybe revolutionize them. I think there are some other areas where the impact will be less, but anytime we buy into a business, and anytime we bought in for some time, we have tried to think of what that business is going to look like in 5 or 10 or 15 years, and we recognize that the internet, in many forms of retailing, is likely to pose such a threat that we simply wouldn't want to get into the business. I mean, not that we can measure it perfectly, but there are a number of retailing operations that we think are threatened, and we do not think that's the case in furniture retailing, and we have 3 very important operations there. We could be wrong, but so far that would be my judgment, that furniture retailing will not be hurt. You've seen other forms of retailing where you're already starting to see some inroads being made, but it's just started. The internet is going to be a huge force in many arenas, but it'll certainly be a huge force in retailing. Now, it may benefit us in certain areas. I would expect the internet to benefit Borsheims in a very big way, and you noticed in the movie that we talked about Borsheims.com coming online in May. There's something up there now, but you'll see a new format within a month or so. Now, you might say in jewelry retailing, with millions of things that you can click onto 10 years from now, who is going to be important in terms of online retailing of jewelry? I would argue that two firms have an enormous advantage going in. I would argue that Tiffany has such an advantage. We don't own any Tiffany, but I would say that because of their name, brand names are going to mean very, very much when you have literally, thousands and thousands of choices. People can't. They have to trust somebody. And I think that Tiffany has a name that people would trust. And I think Borsheim's has a name that people would trust. And Borsheim sells jewelry a whole lot cheaper than Tiffany. So I would say that people who are price conscious but also want to deal with a jeweler that they trust implicitly will find their way to Borsheim's in increasing numbers over the internet. And I would say that people that like the blue box, are going to find their way to Tiffany's over time, and they'll pay more money. But I don't see them going for brand X in buying fine jewelry over the internet. So I think that with the brand that Borsheim's has, and with careful nurturing of that brand, I would say that the internet Borsheim's has, and with careful nurturing of that brand, I would say that the internet, the huge one-store location, and yet also go into the homes of people in every part of the world. And that kind of a company should prosper. There are other of our companies I worry about. I can worry about them being hurt in various ways. GEICO is going to be a big beneficiary of the internet. We already are developing substantial business through it. But if I were to buy into any retailing business, whether I was buying the stock of it or buying the whole business, I would think very hard about what people are going to be trying to do to that business through the internet. And it affects real estate that is dedicated to retailing. If you substitute 5% of the retail volume via the internet, where real estate is essentially free, you can have a store in every town in the world through the internet without having any rental expense. So I would give a lot of thought to that if I were owning a lot of retail rental space. Charlie?
Well, I think it is tricky predicting that technological change either will or won't destroy some business. When I was young, the department stores had a bunch of sort of monopolistic advantages. A, they were downtown where the streetcar lines met. B, they had sort of a monopoly on extending revolving credit. And D, they had one-stop shopping in all kinds of weather, and nobody else did. And they lost all three of those advantages, and yet they've done well, a lot of them, for many decades since. At other times, you get a change and you just get destroyed. Our trading stamp business was destroyed by changes in the economic world, and our World Book business has been seriously hurt by the personal computer and the CD-ROM and so forth. I agree it's a big risk, but it's not easy to make predictions in which you have great confidence.
Yeah, if you go down to 16th and Farnham here, where the streetcar tracks used to cross, that was the best real estate in town, and people signed 100-year, 50-year leases on it, and it looked like there was nothing more safe because they weren't going to move the streetcar lines. The only thing was that they moved the streetcars. They just took and converted them into junk. And it seemed very permanent. But the advantage of the big department store, the Marshall Field in Chicago or the Macy's in New York, was this incredible breadth of merchandise. You could go and you could find 300 different types of spools of thread, or 500 different, you could see 500 different wedding dresses or whatever. And you had these 1 million square foot and even 2 million square foot downtown stores, and they were these huge emporiums. And then the shopping center came along, and of course the shopping center created, in effect, a store of many stores. And so you had millions of square feet now, but you still had this incredible variety being offered. The internet becomes a store in your computer, and it has an incredible variety of offerings too. Some of them don't lend themselves very well, it seems to me, to retailing, and others do. But Charlie's right. It's hard to predict exactly how it will turn out. I would expect automobile retailing to change in some important ways, and in very significant part influenced by the internet. But I can't predict exactly how that'll happen. But I don't think it'll look the same 10 or 15 years from now.
Good morning. My name is Jenna. I'm from Long Island, New York. And I was reading through your annual report. You made reference to Wagner and some country western song I never heard of. I was just wondering what kind of music influences you, and are you planning on doing like a musical video?
Well, I think with the performance I gave earlier here in the movie, I don't think there's any future for me. But I do have a very musical family. And since you asked, I will point out that my son Peter's recent CD is available at the Disney booth outside, and Peter had a very successful experience here on public television in March, and will be on tour later on. And my wife is extremely musical, but I don't think I've got much of a future in it. So far, I get no one ever asked me to come back. I mean, I've had a lot of introductory appearances, but very few encores. I like all kinds of music. I've always liked music. We started out around the house singing church hymns, and in 1942, my two sisters who are here today joined me in a 15-minute program on WOW, then the leading radio station in Omaha, and we sang America the Beautiful, and that my dad got elected to Congress on the back of that program. We like to take credit for it. And you see my sisters at the end of the meeting. Charlie, what kind of music do you like?
Well, the one thing I agree with is that if we're going to star Warren, it should be in a musical. The straight acting won't do.
It took me an hour to get that bald for Annie, incidentally. It takes a long time to get bald. Dressing room. Zone 13, please.
Good morning, Mr. Buffett and Mr. Munger. My name is Jack Sutton from Brooklyn, New York. Thank you for hosting today's meeting. With reference to communication stocks, because of the growth of cellular communications and the internet, certain stocks hold the prospect of substantially above average revenue and earnings growth. AT&T and Nokia, as an example, earn respectable margins and return on common equity, and would seem to fit Berkshire's criteria from a financial perspective. Has Berkshire reviewed stocks in the area of communications, and would you consider an investment in this area at some time in the future?
Yeah, there's certainly no question that amazing things have happened in communications. It's interesting that you mentioned AT&T, because AT&T's return on equity over the last 15 years has been very, very poor. Now, they've had special charges time after time and said, don't count this. But the overall return on equity, if you calculate it for AT&T for the last 15 years, it's not been good at all. They were the leader in the field, but so far what has happened has hurt them, at least relative to their competition, far more than it's helped them. We have a fellow on our board, Walter Scott, who's right here in the front row, if I can't quite see him, but who knows a lot more about this. He used to try to explain to me these changes that were taking place. We'd ride down to football games on Saturday, and Walter would patiently explain to me, like he was talking to a sixth grader, what was going to happen in communications. And the problem was that he had a fourth grader in the car with him, namely me. So I never got it, but Walter did. And he's done very well in MFS and Level 3. And I think for people who understand it and are reasonably early, there could very well be substantial money to be made. There's been an awful lot of money made in this town of Omaha by people, not one of them. And I have no insights that I bring to that game that I think are in any way superior, and in probably many cases not even equal to those of other participants. There's a lot of difference between making money and spotting a wonderful industry. You know, the two most important industries in the first half of this century in the United States, in the world, probably were the auto industry and the airplane industry. I mean, here you have these two discoveries both in the first decade, essentially in the first decade of the century. And if you'd foreseen in 1905 or thereabouts what the auto would do to the world, let alone or this country, or what the airplane would do, or thereabouts what the auto would do to the world, let alone or this country, or what the airplane would do, got rich by riding the back of that auto industry, and probably even fewer got rich by participating in the airline industry over that time. I mean, millions of people are flying around every day, but the number of people who have made money carrying them around is very limited, and the capital has been lost in that business, the bankruptcies. It's been a terrible business. It's been a marvelous industry. So you do not want to necessarily equate the prospects of growth for an industry with the prospects for growth in your own net worth by participating in it. Charlie?
Well, it reminds me of a time in World War II when there were these two aircraft officers I knew, and they didn't have anything to do at the time. And some general came in to visit, and he said to one of them, he says, "Lieutenant Jones, what do you do?" He says, "I don't do anything." He turned to the second one, he says, "What do you do?" And he says, "I help Lieutenant Jones." That's been my contribution.
You can address me as Lieutenant Jones for the rest of the meeting. Yeah.